only on Bloomberg Quint.
Well, welcome. You're watching Countdown right here on Bloomberg Quint Live. A softer start for today. The week has started on a negative note for the Nifty 50, which is down about 0.6%. The banks are looking more than weak right now, giving up almost 1% on the Nifty Bank. The headlines for the time being: Indian markets fail to hold on to morning gains as steady crude prices hurt oil marketing companies. Mutual funds registered negative flows for the second straight month of March, but outflows lower than the same period last year. The board of Lakshmi Vilas Bank has approved a merger with mortgage lender IndiaBulls Housing Finance. It's in a share swap deal. The merger is subject to regulatory approvals. And Jet Airways lenders invite bids for the airline. 5 firms are set to have started due diligence. Baring Private Equity Asia and its arms will acquire 56% stake in NIT Technologies for nearly 5,000 crores. This will include an open offer for 26%. Neeraj, good afternoon. A slower start to the week, about 0.6% under 11,600 on the Nifty.
Yeah, in the morning we were talking about how we are doing better than what the Asian cues were suggesting, but now reality check taking over and the bank Nifty again leading the charge downwards. So 0.5% off for the benchmark index Sensex, but the bank Nifty down about 0.8 or 0.9%. So that has looked fairly wobbly. Mid caps and small caps and the market breadth should come up on your screen for a moment. About 1% lower for the mid cap space, small caps 0.5%, and there's been a bit of a yawning gap and quite a sudden spurt. The last half an hour have been bad for the Nifty Bank, for the small caps as well. It's essentially some exaggerated selling in the last 30 or 45 minutes of trade. Wonder what the world markets are up to just before we take a detour, take a look at what the heat map is showing. But 1:2 in favor of the declines, and the world markets well, ho-hum, but marginally in the red. I would reckon that the Dow futures too, after having 2 straight weeks of gains, probably pointing towards a quiet start if the European indices are anything to go by. Yeah, a quiet start for sure. Bring up the heat map and just show you what's moving and what's not. A lot of red. IndiaBulls Housing, the top loser, not surprised there. Commodities have come off and there's some profit booking in high-flying names. So Vedanta, Reliance Industries are all down. All marketing companies are down. GAIL is down. Profit booking in stocks like Bajaj Finance, for example. HDFC is down about 1% as well. So there's weakness across the board. HDFC Bank down about 1% too. And not too many heavyweights in the green. TCS, a bit of a lone ranger. In terms of heavyweights at least, ONGC and M&M2 have some marginal gains. So fairly somber afternoon of trade from a bull's perspective, Devina. The volumes too okay, and the market rate certainly has worsened in the last few minutes. What's catching your eye?
Well, definitely it's, what we've got in the broader market space that we've been seeing the last few days. Actually, there was a little bit of an outperformance vis-a-vis the benchmark index, but in today's session, once again, the weakness has crept back into the broader markets as well. And like we saw, the advanced decline ratio, it's worsened over the last few hours of trade. Some stocks, however, that are in focus this morning, since morning rather, one being the counterparty to the IndiaBulls Housing Finance and Lakshmi Vilas Bank deal is Lakshmi Vilas Bank from the broader market. That stock's doing well, about 4.9% higher. The share swap deal suggesting a 35% premium at which the deal has happened for Lakshmi Vilas Bank. Jet Airways, on the other hand, bids being invited from prospective buyers of the stake in Jet Airways, and then you have NIT Limited and NIT Technology with Baring PE looking to pick up the 30% stake and make an additional open offer of 26%. Other small banks include the likes of Karur Vysya Bank, Karnataka Bank, South Indian Bank. These stocks were active in the early morning session, saw gains of closer to about 4.5% in early morning trade. Towards the end of trade, with what's been happening in the bank Nifty, most of these banks have lost their steam. Sugar stocks have fallen, so Friday's session was a big bumper move for these sugar names. Today's session, with news of government looking to buy power at a lesser rate from sugar companies, sugar millers. Knock has been taken on Sri Lanka Sugars as well as Berhampur Chini, which are down heavily in trade this afternoon. And a few stocks which are trading on the back of heavy volumes, one being from the real estate pack, Indiabulls Realty. The stock's up a heavy 8.8% on good volumes. Vodafone Idea continues to trade in the green. That's got gains of about 5.8% with volumes much higher than the last 20 days average. And then you've got a Shankara Building Products. The stock actually stacks up quite heavily in terms of the losses that the stock had made in the last 1 month and a half. Today's session sees some bit of a rebound that's come back 4.8% higher on Shankara Building Products. Let's take a look at what's happening in the futures and options space as well. Agam Vakil joins in for that. Agam.
Right, well, we're seeing some weakness in the markets right now with the Nifty losing out the 11,600 mark. So there certainly is some selling pressure in the markets, considering a 1.6% increase in open interest for the Nifty futures. The Nifty banking futures, again, well, there isn't too much, surprise here either, considering a near 1% drop in the index, with the open interest not showing as much of an increase there. But the Nifty banking April futures still hanging on to the 30,000 mark. The WIX has risen by 10.5% and it is now at 20.3. A considerable expansion in option premiums, and as you can see on your screen, substantial writing around the 11,700 call, and of course the 12,000 call continues to see more and more selling of options as far as the call is concerned. But in terms of stocks, and this is perhaps there is a little more, I would say, traction with DLF now losing 7.5%. It's at 186 and something severely, well, I would say wrong, considering a very sharp drop there. Moving on from DLF on to NIT Technologies, currently trading near days lows, now at 1309, so more correction here as well. And from there, Vodafone Idea continues to trend higher because of the rights issue. We're seeing shorts coming through in this one, where open interest down nearly 4%. And finally, we also have a lot of traction in Jet Airways, where you do see a 1% increase in OI. So open interest has again gone, but on the whole, it's not looking that great, considering well, queues have certainly worsened over the last 1 hour of trade.
Yes, they indeed have. Agam, thanks so much for putting that into perspective. Let's start the conversation with our guests on the show, along with a global voice. Harry Colvin of Longview Economics joins us right now on the show. Harry, good having you. Thanks much for joining in. Good morning to you. The world doesn't seem to be an unhappy place. The hopes are that we'll hear something definitive on the trade truce, so that takes care of at least the sentiment around world trade. But then there are some imponderables, what with happening around Brexit, and of course what's happening to oil.
Yeah, I mean, Brexit politically is a bit of a mess, as you will have been observing. I think economically for the UK economy, the real key is the currency. And really the question is, how much currency weakness do we get? Probably we're going to get a deal and the currency will remain underpinned and probably even rally. And I think if that happens, then the UK economy is in a relatively safe place, because we import a little bit of deflation. The Bank of England doesn't need to raise rates, as it has been talking about doing in recent months. Much more likely they may well cut, along with other central banks around the world. And we get better income growth in real terms. So I think really our economy is all about the currency, and probably the currency will remain bid, and it'll move higher a little bit as we see some sort of deal, some sort of agreement emerging, because there's no appetite in Parliament for a no-deal Brexit. We're going to get a deal and the economy is going to be okay. And then on oil, I mean, you mentioned oil. We like oil. We moved overweight oil in strategic portfolios in December. And I think the key is that we had a very low oil price, and that generated a supply response. The solution to low oil prices, of course, is always low oil prices. That's what generates supply response. That's what tightens up the market, and that's what we're seeing now. So we quite like oil. We're overweight, and we're staying with that for now.
But if you continue to see, strengthening in oil prices, that probably wouldn't augur too well with regards to equity markets, particularly in some of the emerging markets, which are very, very heavily dependent on oil imports. For example, India as a country. So, how would that balance out?
Yeah, I mean, clearly high rising oil prices benefits certain producers and exporters, particularly some of the emerging market economies in the Middle East. But I think, look, the general outlook for emerging market equities is really quite positive now, because outperformance in emerging markets comes almost always in the last decade whenever we've had a Fed that has stepped away from tightening monetary policy. And of course, that's what we've seen in the last several months. And it's a rerun of the 2015-2016 roadmap where the Fed wanted to hike, they were signaling hikes, and they stepped back. And as a result, we had a stronger dollar, and we had capital flowing into emerging market economies and a phase of outperformance in EM equities. And so I think that's what we're entering into now. This is an environment in which we want to be overweight EM generally.
And we have been seeing that as a trend over the last 1 month at least, where a lot of foreign money has been coming into domestic shores. Is that likely to continue according to you? And what is the conversation around foreign investments with regards to bond market investments versus equity market investments?
Yeah, I mean, look, we haven't seen outperformance in EM for the last month. We accept that. These things, you know, this is really a 6 to 12 month view, and of course the theme ebbs and flows. So I think while we've got a more dovish Fed, then it creates a very attractive environment for EM. So that's really the thinking there. So that's where we are. We like EM. We're staying underweight. I mean, we're staying underweight some parts of the credit market, particularly high yield in the US. And then in terms of bonds, and in terms of bonds versus equities, we're of the view that this move lower in bond yields is really quite advanced. A lot of the bad news in the US economy is probably priced in, so the 10-year yields moved an awful lot. A lot of our technical models are now suggesting that now is the time to be selling bonds. We've been very overweight. And I think we're into a phase of global reflation. So, you know, I think bonds don't do so well over the course of the next 6 to 12 months. Bond prices probably struggle to make much more in terms of gains. And really the place to be is emerging markets, particularly because China's credit cycle appears to be turning.
Okay, one question on how do you look at EMs like India? The month of March was full of ETF dedicated money finding its way, maybe weightage wise or otherwise, into select economies. What happens now that a lot of these markets are either fairly valued or trading slightly higher levels than fairly valued, and in some cases at least not undervalued the way they were at the start of the year?
Yeah, it's a very good question. Our view is that on a 6 to 12, even 18 month or 24 month view, valuations are not a helpful tool for investment making decisions. The key determining factor of outperformance in emerging markets versus DM historically has been the direction of travel of US monetary policy, which, as we know, there will be no hikes in 2019. You know, it wasn't that long ago, it was October last year, the Fed were talking about doing 2, 3, 4 hikes this year. So hikes are off the table. We're going to see the end of QT. We've got a dovish Fed, and that's the environment in which EM outperforms. So valuations don't really matter. Valuations just get larger. They become more expensive valuations. So it's all about liquidity cycles and the global liquidity environment, which is now favorable for EM and other risk assets.
Just one last question, Harry, before we let you go, is the fact that, you know, if things do come about with regards to the trade talks, anticipation is that all the money that's been flooding emerging markets might actually move back into China, particularly. If that tends to happen, would that mean that this big liquidity-driven rally that we've been seeing in emerging markets will come to a standstill?
Yeah, it's a very good point. And capital's already been moving back into China. We saw the FX reserves rising in China, which is we saw that this weekend, the data coming out. That's a good indication that money is now flowing back into the economy. And of course, you can see it in markets. You look at the Chinese stock market, it's moving up strongly. You look at credit spreads in China, they've narrowed quite significantly. And I think the key for China is the PBOC, as we saw more of over the weekend, is easing monetary policy. So we're seeing a turn in the credit cycle. Interbank rates are down a lot, loan approvals are up, credit conditions have eased. This is all setting the stage for the beginning of a re-acceleration in China's economy, which has been very soft over the course of the last 12 to 18 months. So, you know, while the Fed is on hold, I think capital continues to move into EM, particularly it moves into China, and we see further strength in the Chinese equity market.
We'll leave it at that. Thanks so much for taking the time out and being with us and giving us your perspective. Really appreciate your time.
Thanks.
Well, that's Colvin with his thoughts on the world matters. Before we move on to the next conversation and get in the management of Sobha Limited, hear out one more voice. Domestic passenger vehicle sales numbers were quite dismal, shows the SAM data. Not that it's come out of the blue, with automakers posting sharp drops in monthly sales numbers. SAM President Rajan Vadera says one of the factors behind such a drop is the upcoming election. Nishant Sharma caught up with him and started off by asking him for an estimate on the new financial year.
You go historically, then in the year F09, F14, before the election, there was a drop in the overall growth, and the subsequent years' growth has been very good. So if I go by that indication, then post-May, we should see a recovery in the growth rate going probably higher than what we have seen.
Right. And talking about the expectation you have from the coming government, or what can also aid the growth in the auto sector?
Sure. You see, industry is going through substantial cost increases. Commodity increases were all-time high last year, and also there is a lot of thrust through new regulatory requirements which are going to add costs. BS6 is a very, very high cost introduction. So therefore we are looking at some relief from the government on the GST. We are requesting government if 28% can be reduced to 18%. That will definitely give a flip, because the kind of cost increases that are going to happen will result in loss of sales and hence loss of revenue for the government as well. So therefore it should be a win-win situation, and we're looking forward to this request from the government.
Right. And given that it's an election year, how much of impact that will have on the overall market sentiment?
I think post the election, sentiment should be positive, and a lot of infrastructure projects that are going to be completed next year, and I think more stability will come in. All kinds of sentiments, that slow down the sales should improve, and consequently we're looking at good recovery next year.
Right. And if you look at the two-wheeler segment, there's a huge inventory pile-up. Yeah. The dealers are also stretched. When do you see the recovery? What's happening there?
I think you would have noticed from the March figures, the production have been less, sales also have been lower. So the inventory correction has started. And two-wheeler industry went through very major turmoil of 10% price increase consequent to the 5-year insurance thing that came in, and which slowed down the industry. And now, of course, with the inventory trends getting corrected, post-elections, we should see growth coming back to about 7 to 10% in two-wheelers.
Right. And talking about the passenger vehicle segment, what's leading to that not high pickup there?
Yeah, passenger vehicle segment has grown. Not that there is a degrowth, but the growth is of the order of 2 to 3%. Right. You would have seen that. Well, there are many factors for that. It all started with the Kerala floods, followed by fuel price increases, followed by huge cost correction that had to happen because of the commodity. Somewhere I think people are using shared mobility even better, even more than what they were doing before. Then came the NBFC funding, which slowed down. And then some other parameters of sentiments not being very good. The growth rate has dropped. And post-elections, we are hopeful that this should get back to some decent single-digit growth figures.
Right.
Okay, let's move on to yet another sector, rate sensitives, and that's real estate. Now, Sobha Limited put out their fourth quarter updates. Total sales value rose 13.4% compared to last year, while average price realizations remain largely flat, but over the last 5 quarters have maybe seen a marginal uptake. Let's discuss this performance in greater detail with Mr. J.C. Sharma. He's the Vice Chairman and MD of Sobha. Mr. Sharma, so good having you. Thanks much for joining in. Let's first talk about the sales volumes and how they're shaped up in the quarter gone by. New sales, as I see, quarter on quarter for you as a company have kept on moving up. There may have been aberrations, but as we speak at quarter 4, it's slightly higher than quarter 4 of the last year. How has the sentiment been?
We believe that sentiments have definitely and certainly turned towards the positivity side. We believe now that as the customers start looking around to buy a home, they are finding it extremely difficult from a choices point of view, because the number of players right now who are offering projects RERA approved with a good track record in almost all the markets, they have come down quite a bit. So you have a scenario where while on paper lots of supply seems to be available, when you want to take an actual call, you find that the most of the supplies are being offered by those people whose track record is not that great, which is allowing some kind of a consolidation of the better players. And going forward, this trend can only become better and better. And company like Sobha should be one of the big beneficiary of this kind of a trend going forward is our view. As far as we are concerned, we did launch good number of projects in last couple of quarters. We did complete a good number of projects in the last financial year. And we believe that this kind of visibility helped us to promote our newly launched projects, as is reflected in our last quarter result, which helped us to achieve record sales numbers in the last quarter, as well as record sales numbers for the whole year. And this allows us to give that kind of a comfort and confidence that this kind of a double-digit volume growth we can sustain going forward to this current financial year as well.
Mr. Sharma, could you also talk a little bit more about in terms of a million square feet, how much are we targeting for year end?
See, we have already achieved 4 million square feet plus in this financial year. And when we say double digit, definitely it should be upward of 10% or so. We will not be able to give any kind of a guideline as far as the specific numbers are concerned. Primarily, it is on account of till our board approves the financial plan for this financial year, it will be premature. But the new launches, they are on track. The existing projects, more or less, they are being sold across all the markets. And we do not have that fear of carrying finished stock inventory. So all such things, it gives us that kind of a comfort that this year also should be relatively better than what we have achieved in the last financial year.
Are you witnessing a change in the industry growth rate as well? I mean, off late we have been seeing a pickup, where there has been an increase in demand as well. But nonetheless, has there been a shift between residential and commercial per se?
See, as far as the commercial space uptick is concerned, we get the sense that that particular sector is doing exceedingly well. And what you should say, the occupancy levels are at its all-time high. This gives us a kind of a pipeline comfort that most of these spaces are being acquired by those companies who are adding new jobs. And these are the people who do not live in the city. Today or tomorrow, they will come and buy our homes. And that is the pipeline, we are all aiming at to grab as part of improving our own sales performance. So we remain quite bullish that the residential space market, which has been going through with lots of challenges, especially post-demonetization, more or less it is done with all those structural challenges, and the real buyers are there. And as I was talking to you, those real buyers have started now zeroing into the reliable, reputed developers. And that is where you will see their performance relatively better. At the same time, to answer your question, Yes, the overall market also, if we look at 2018-19 vis-a-vis 2017-18, yes, definitely the real estate market, residential space has also grown, as well as I believe that the core market of homes below 1 crore as well also has started picking up at a faster pace than a luxury market, say above 1.5 crore plus sort of a thing.
Mr. Sharma, a question that I wanted to ask you may not be applicable to you directly, but I don't know if you've seen that in any of your projects, but a refrain that came in from select people was that a project built over the last couple of years and priced at a slightly premium pricing, and the inability to reduce the price because the price can't go below the booking price, otherwise the builder has to refund the monies to those people who already booked it at the booking price, and therefore builders may not be aggressively selling a project which may be higher price, but are starting newer projects, launching newer projects and selling those with a lower ticket price as well, because pricing by and large has come off. Now in your case, I don't see evidence of that, but do you see evidence of that across the spectrum? And therefore, would you believe that pricing by and large over the next 12 months average would be lower than what the pricing has been in FY19?
I won't agree to that. Couple of reasons. Now all the new project launches, anybody who will be doing, they need to absorb the GST as part of their construction cost, and accordingly they have to charge the revised GST rates. So to that an extent, I do believe that the prices from where currently they are for the ongoing projects, they can only go up, because when you increase, when you take the input cost and take that input increase of GST as part of your construction cost, to protect your margins, you will be left with no other alternative but to increase it little bit more than where currently we are. Number two, I also believe that the inventory is reducing faster than what the market believes. It may not be visible because most of the projects, they are stuck and they still remain stuck with no progress whatsoever. But as part of the overall inventory, those projects still get included. So in my view, when the demand supply scenario becomes favorable, little bit from the developer's perspective, the prices from there onwards can only go up. We have also seen, especially in case of cement, last 4 or 5 months, the prices have tended to go up. Cement plays an important role in our construction cost. If this kind of a trend sustains, again, you need to ensure that somewhere you make efforts to increase the prices. To answer your other question, maybe some developers having a higher priced inventories with existing customers have no other choice but to launch new projects if they have the required land at a lower price, lower ticket, to see that the cash flows and the existing customers, they continue to protect. But going forward, all these things, they will not be sustainable. We have to put a price which is acceptable to the customer as well as make some sense from a reasonable margin point of view. And whenever we are going to launch the projects, that criteria needs to be met. We remain confident that going forward, Sobha's margins can only move upwards from where they were, which means that we are not reducing the prices, and wherever there is a scope, we would like to take a little bit extra price to recover the increase in the input cost.
Right. Mr. Sharma, just one last question before we let you go. Coming on the situation on ground with regards to the liquidity and the cost of funding now for the real estate sector, and particularly for yourself.
See, as far as the liquidity situation is concerned, we get a feeling that things are becoming better day by day. There was a scenario in the month of September, October, where we all felt that whether the public sector banks and the other private sector banks will continue to keep lending or whether they will honor already sanctioned projects or not, because some kind of a nudge was being made to delay in getting the money against the sanctioned projects as well. When we enter into the month of April, we find on ground liquidity much better. Even some of the NBFCs also have aggressively started wooing again the developers. As far as the retail customers were concerned, they did not have much of a problem except for a couple of the NBFCs who did not honor their commitments. And in the year 1920, as far as the liquidity is concerned, it should not be an issue. As far as the interest rates are concerned, I have a feeling that we did face some kind of increase in the interest cost in the last 2 quarters. But going forward, either the interest rates are likely to marginally come down or stay put where they are currently. Our current cost of funds remains lower than 10%, and going forward, we would like to stick to that kind of an average rate of interest.
Okay, got that. Mr. Sharma, we leave it at that. Thank you so very much for joining us this afternoon. Mr. J.C. Sharma there of Sobha Developers. Bringing in our market experts, we've got the Nifty, which is down almost 1%. The Bank Nifty already looking weak under 29,800, down more, just about 1% or so. Brijesh Singh of Stock Access is joining us on the show right now. Along with him, Sumeet Bagadia of Choice Broking is also there. Gentlemen, good afternoon to the both of you. I'm going to start off with Brijesh first on the index and how you would trade it right now.
Good afternoon, Devina. See, no doubt on our hourly charts, the lower highs pattern has given Nifty a sell call right now. The previous swing low was somewhere around 1150 or 1160 zone. Then we have seen a little bit base formation, but it doesn't mean that the Nifty would be holding on this level of 11,560 or say 11,565. Chances are that we might try to touch 11,500 or even below that also. So, and the aggressive trading has been concerned. So, any rise, if we see Nifty spot at 11,580 or say 11,590, one can go for a sell side with the stop loss of 11,620 and look for the target of 11,520 or even 11,500. If we are giving a closing below 11,520, then chances are that we are heading for another, say, 100 points of correction can be seen. So I am looking at Nifty breaking a level of 11,500 in coming days. Whereas the Bank Nifty has been concerned, this is it's been trading near the very crucial support of 29,700 or say 29,750. It should not be broken. But anyhow, if it breaks, then another 300 to 400 points of correction can be seen. That means Bank Nifty, if it breaks 29,700, then chances are that Bank Nifty is heading for 29,300 to 29,400 zone. Whereas on the higher side is been concerned, it has a stiff resistance now at 30,100 followed by 30,300 odd level, but chances are that once we might try and break 29,700 on a downside.
Okay, Sumeet Bagadia, what's the trade for the afternoon today on the indices?
Hi, good afternoon. Well, I think the index has supported around 11,550 levels. Till the time these levels are not taken away, it's better to be on buy side. If the 11,550 if the index is able to break the support of 11,550 levels, and there is a possibility that we might see correction till 11,480 or 11,450 levels. If the support holds, then there is a possibility that we might see a pullback or bounce back till 11,600, 11,650 levels, and above 11,650, markets will again have a positive view for the targets of 11,800 levels. We feel that sooner or later market should give some pullback or bounce back from present levels, and from here on we should see a upside move till 11,650 levels.
Stock idea, Sumeet, I'll come to you first.
Two stocks for the day. First one is NMDC. NMDC looks good on charts. We feel that from here on we can see a move till 112 or 115 levels. 104 should be the stop loss for long positions for the upside target of 112 and 115 levels. On the other side, Kotak Bank looks good to me. Kotak Bank looks like it can move up till 1370 or 1400 levels. So one can initiate long positions at the current market price with the stop loss to be placed at 1320 on lower side for the upside target of 1370 and 1400 levels.
Okay, Pritesh, what about you?
From NIDSC, I have a one buy call and one sell call. I'll start with the one sell call first. The RAC again on the shorter term time frame of the chart had made a lower highs formation with increase in volume. So somewhere around 150 the stock has been quoting. So one can go for a sell side with a strict stop loss of 155, play for the target of 141, 142. Time frame to hold this counter would be 3 to 4 trading session. And in IT, Infosys is looking good on the chart. Still, all the pain has been there in the Nifty, but still it's been holding on. So it's giving a sign of a bullishness. So at the present rate of 759 or a little bit below, if it trades somewhere around 755, one can take a buy call in it with a strict stop loss of 740, live for the target of 780, 785. If I'm not mistaken, 772 is the 52-week high. So chances are that we might be breaking this level of say 772, and the target of 780 can be achieved. The time frame to hold this counter would be 4 to 5 trading session.
All right, stay on with us, gentlemen. Lots more to talk about, but focusing at the news at hand, Lakshmi Vilas Bank and Indiabulls Housing Finance have announced a scheme of amalgamation. The merger, if approved by the RBI, would allow Indiabulls Group an entry into the banking sector. However, brokerages don't seem too enthused with the plan, with regulatory hurdles being seen as a big problem. Shefali Malik is joining us with what they are saying. Shefali.
Well, brokerages are expressing their concern as to, whether this transaction will go through or not, and because whether the RBI will approve this particular transaction because of the group's real estate exposure. So starting with Credit Suisse, they're saying that the return on equity is likely to drop to about 10% in the first year of merger versus about 24% currently. And it's the higher reserve requirements, that is a higher CRR and SLR requirement, priority sector lending norms and higher operating expenses as well, that are likely to weigh down on the return on equity. And also, given Lakshmi Vilas Bank's weak deposit franchisee, the funding cost benefit will also be limited in the near term. So they are staying neutral on the stock with, because it's trading at about 2 times FY21 merged book. Other than that, Macquarie also put out a note. They're maintaining their outperform rating on the counter with a target price of about 836 rupees a piece. And they're saying that odds are stacked up against the RBI approval. In the past as well, Indiabulls, last time when it applied for a banking license, that time also it had people with high credentials on its board, but that did not help them that time as well. And other than that, the precedents which they talked about of Bandhan, IndusInd Bank and Capital First as well is not really an apple-to-apple comparison according to Macquarie. Investec also put out a note, and they're saying that the merger may face regulatory hurdles and there's not much upside for Indiabulls from here on. And Indiabulls Ventures is kept outside the merger, something that RBI does not permit for its banking license guidelines. The merged entity as well is likely to be weak, considering just the 23% CASA ratio of Lakshmi Vilas Bank, and also Indiabulls mortgage book, which is the dominant part of their book, that is a low ROA. So the combined entity, according to them, is going to be weak.
All right. So while optically it looks good for Lakshmi Vilas Bank with 35% premium at which is share swaps happening, we go into the internals, brokerages are not pretty pleased with it.
Yeah, and let's see. For now, though, I think the print is showing that LVB does well and Indiabulls Housing doesn't, because Indiabulls Housing Finance is down about 4.5% in the session. So that's not looking all that great. Shefali, thanks so much for joining us and giving us that perspective. Shefali Malik, and a story around this as well on the website. So do log on to BloombergQuint.com and read what brokerages have made of this particular deal. I'm calling it a deal because it's been announced as one. Let's see if it actually sees the light at the end of the day or no. Just one quick perspective out here on the charts on Indiabulls Housing Finance, because that's the more liquid name. Pritesh, quick thoughts here?
Right now, with increase in volume, the sell call has been generated. So 862, the stock has been quoting present rate or any rise till 871 can go for a sell side with a stop loss of 895. Play for the target of 820, 825, and closing below 825, stock is going for the level of 780 also.
The other Indiabulls stock that is doing really well is Indiabulls Realty. and that stock is active since morning, up 8.5%. Has given up from the highs of the day, but nonetheless at about 98 right now. Sumeet, Bagadia, would you be a trader in Indiabulls Realty?
See, Indiabulls Real Estate looks like that in the next couple of weeks there is a possibility that we might see a move till 105, 110 levels. I think it has given a good move today. Looking at the chart, it seems that the stock can move up and can touch 200 DMA levels, that is 105. If 105 is taken away, we can see extended move till 110 also. Yeah, one can initiate long positions in Indiabulls Real Estate at the current market price, with the stop loss to be placed at 92 rupees on lower side for the upside target of 105 and 110 levels in next couple of days or in next 2 to 3 weeks time horizon.
Okay. Samir Kalra of Target Investing is also joining us on the show this afternoon. Samir, good afternoon to you. We haven't spoken in some time now, so good to get your sense on what we're seeing in terms of the overall market direction, since we're running out of fizz over the last few days.
So I think we have an important week ahead. Results are kicking in, elections are kicking in. So there's ought to be some kind of a profit taking and some kind of subdued market for a few days before we enter that phase. And even during that phase, if you see historically, we have seen around a 4 and 5% kind of a return. So it'll be mostly a very average next 2 months without any excitement till the time the elections results come off. Because from the result side, I think it'll be a mixed bag again. You will have positives, but you will have negatives as well. So that will keep them on the sidelines. So I think it's good for a consolidation to happen as of now.
Okay. Samir, if you had Indiabulls Housing Finance in your portfolio for whatever reason, you made some gains. Now the news is out, the swap is out. We do not know whether it will see the light of the day or no. Would you take the chips off the table?
So I would have taken it off the table on the morning only. If you haven't, you still take it. Because even if RBI approvals and everything has to work out, it'll take 2 to 3 months. It'll not happen overnight. So by the time you have the risk of the news already being factored and the downside is more open. So I think the valuations can be only 10% above from here, but there's a 20-30% downside as well.
You know, the other sector that's kind of beaten down is sugar. Now the news flow, probable news flow, is that the revenues from the power, or the rates from the power that is bought from the sugar companies, then the interest subvention and all of that also. But it's pretty curious. Here's a sector that is looking at coming on the mend, and I think this, if turns out to be true, could hit them. What have you heard with regards to this? And therefore, what's your advice to anybody who still has some sugar names in the portfolio? Balram, let's talk about the good names. Balrampur, Dhampur, the two names, if you have them in your portfolio.
So Neeraj, we've already talked about sugar sector a lot of times, and I've always said stay away from the sector. If you have invested, I think it's better to take out at least some profits from here, because even if the cycle is about to turn, it will take 3 to 6 months. It will not happen overnight. Now the only point is the cycle is only overturning through ethanol part of it, not from the sugar part of it. And if the subvention and all is not happening on the ground, because if it happens on the ground, your fiscal will take a hit, which I think they have stopped for at least FY19. How it works out in FY20, that has to be seen. So I think even the payments are somewhere being stopped on the ground as far as my information or my research is there.
Payments to
the farmers. So even if that amount is being held and the dispersals from the banks to the sugar companies are slowing down. So this kind of a cycle may turn around much more to the downside more quickly rather than turning to a reversal anytime soon. So I see a profit, as in you should book out profits. You should create at least a lower kind of a weightage right now to sugar companies. I only play through Praj because I think ethanol is the only story which is working for them, and Praj is the biggest beneficiary.
You know, the other, just one thing, and I do not know how to distinguish, because there are not too many long-term players in sugar which are not based in UP maybe, but for EID or some of the others. But this ruling, if at all, is for the UP-based companies and not necessarily for the others. So for the others, EID Parry, Renuka, Sakti, etc., And you please do your research, because you do not the balance. I mean, you have to take a call on the balance sheets of these companies. But the ruling for them is not necessarily the same as the ruling for the UP-based companies. So just got to keep that at the back of your mind. But it's just some heavy selling that we've seen in some of the sugar names in the session today. Balrampur is down 8%. Dhampur, etc. Everything has just corrected very, very strongly in the session today.
11,560 on the Nifty as well. That's lost some more ground. Now down more than 100 points on the Nifty 50. That's the lowest point of the day. And so is the case with the Nifty Bank. Just want to once again take a look at whether or not the market breadth has worsened now. We've been looking at the morning session and the kind of crisscross that the advances and declines have taken. So 1,000 stocks, more than 1,000 have declined. So 1:2 in favor of the declines in early afternoon. Brajesh, since we are on the topic of sugar and the kind of sell-off that they've seen today, is there a shorting opportunity?
See, Dhampur sugar, if I'm not mistaken, one can take a sell call in it somewhere around 214, if I'm not mistaken, or 215. The stock is been quoting. Shorter term time frame chart suggests that 220, 222 would be acting as a resistance. So keeping a stop loss of 222 or say 220, one can take a sell call in it for the target of 202 to 204. And if there is a closing of 202 below that, then chances are that in coming days stock is heading for 190 also. So one can go for a sell side in Dhampur sugar. Whereas the Balrampur Chini is been concerned, the stock morning when I was been watching, it was in the formation of a bearish engulfing candlestick somewhere around 930. If I'm not mistaken, the stock was quoting somewhere around 140 juncture. Right now at 133, risk reward ratio not in the favor. Any rise above 135, one can take a sell call with the stop loss of 142. Play for the target of 127. Closing below 127, give an invitation for 120.
Okay. Two stocks within the real estate pocket, and we should take a look at Indiabulls Real Estate, since we've already spoken about that one. DLF is the other one. There was a big block deal that happened in early morning trade, and the stock has been down since then. 8% under for a DLF, that's at 185. Should pull up Godrej Properties as well. The stock has had a stellar run and today is down 4.5%. So some profit taking that's pulling the stock low. Though it's picked up from the lows of the day, but it's still down about 4%. Sumeet, Bagadia, any of these stocks within the real estate pocket, be it a DLF, be it a Godrej Properties, Indiabulls Real Estate?
Indiabulls Real Estate, we have already spoken about this stock. We feel that this stock is headed higher, and from here on we can see a move till 105, 110 levels. Apart from this, we feel that Oberoi Realty is also a very good stock. One can initiate long positions in Oberoi Realty at the current market price, or if there is a dip of around 10 to 15 points from present levels, then that should be used as a buying opportunity. High side, it has resistance at around 535, 540 levels. Once the levels are taken away, we can see a move till 580 or 600 levels in the next couple of months. I think any dip in this stock till 510, 515 levels should be used as buying opportunity.
Okay. Sumeet, just one quick thought on NIIT Limited as well. Now that obviously benefits as a result of this in the price already?
I think to some extent, but there is kind of 30-40 rupees more left, which I figure out, because if you see even the fundamental standalone basis, the results are around 25 crores of profit for 9 months as compared to 2 crores loss. So I think even that has on its own has a little bit of EPS evolving over there. So even if that goes to 30-35, I think 30 to 40 rupees still is there in the system.
But you wouldn't initiate a fresh investment?
No,
not, if you have it, stay invested.
Yeah, stay invested. Don't book out so soon.
Don't book out so soon. That's the advice. 31 million shares traded, 19% higher, and has had a trending day in the session today. The other stock in focus is Jet Airways. The lenders have called for bids from interested parties to acquire 75% stake in the airline, and there are at least 5 bidders that have started doing the diligence. Early stages though, and they may well choose to sit out eventually. Remember, we spoke about this in the morning. Vishwan Nair, who broke the story, joins us again, maybe with some additional details if he has them. Wish you very important piece of development. Anything else that's added to this? And of course, fill us in what all that you're learning.
Neeraj, I'll tell you what we've learned so far is that there are about 6 bidders who are interested in looking at a due diligence at Jet Airways. This includes 3 strategic investors as well as 3 financial investors, KKR, Blackstone and TVG Capital on the financial side. and Lufthansa, Singapore Airlines and Swiss Airlines, all three strategic investors who might be looking at the case. Remember that SBI has called for expressions of interest. Once the EOI process is completed, then the lender will issue bid documents to interested bidders, who will then conduct a due diligence, submit a final bid by the 30th of April, and on the basis of that, between 31.2% to 75% stake in Jet Airways will be sold to this new investor, whoever it turns out to be. But again, the due diligence is only the first stage of this entire process. After that, the investors themselves have to take a call whether this makes any financial sense for them to invest money into this airline. And it's entirely possible that some of these bidders may sort of bow out of the process once the first stages are over. Of course, all of these things will get clarified by end April, early May, which is when SBI will take a call on who exactly ends up owning Jet Airways. The lenders have already stated that if they do not find this sale process going successfully, then they can of course look at other options. The other options on the table is the lenders can continue to hold the Jet Airways stake that they will get after converting debt to equity, or they could go for an insolvency proceeding. Of course, none of these decisions are taken right now. Only by the first week of May will we know how exactly the lenders intend to proceed.
All right, Vishy, thanks very much for that. Nonetheless, the stock in today's session has seen two big step-ups, sometime during early morning and now just a few moments ago. So at 267, this Jet Airways for you, 14.23 million shares have already been traded on the counter. Sumeet, you want to come?
So I own the stock. Clients own the stock. The process has been started, so there is some kind of a movement on the system. And I think given the short period which they have allocated to the process from my side of it, there is some kind of a confirmed or some way confirmed movement already there in the system before the process was started. So I think there certain buyers are already firm on giving an offer, and certain might weigh in or weigh out during the process. But I think you'll find some way of some kind of a solution coming out sooner than later, and that would really surprise the minority shareholders.
Okay, Sumeet, stay on. Some more to talk about, but the other factor that does not impact Jet Airways right now but usually does is crude, and well, has much bigger implications than only on airlines. Prices have been on an upsurge due to recent supply constraints arising out of Libya, which of course added to the concerns. The question is there more upside to prices, and is it even possible to predict that? Let's ask Eugene Weinberg, MD and Head of Commodity Research at Commerzbank. Eugene, good having you. Thanks much for joining in. What's your sense, Eugene? Is the 5-month highs, are these levels that you anticipated because of these supply side constraints that started emerging once OPEC Plus entered into those agreements? And what happens now?
In fact, I was probably one of very few analysts who at the beginning of the year said the prices might well reach and even rise above $70 during this year on a very strongly coordinated actions by the OPEC. It's not anything about demand at the moment. Demand is probably more or less within the expectations, but on the supply side we have many tensions already. We had Venezuela, we have now additionally the tensions in Libya, but we have also a very concentrated and very good orchestrated actions by the OPEC itself, which keeps decreasing its production despite the pleas from the consumers for aiding the supply. So I think that we might see even higher prices during the year, probably reaching the levels of $75, even above this. Definitely there is a floor, there is a ceiling on it, because the OPEC can only influence the prices on a short to medium term. In a longer term, it's very much about the ability of US especially to add additional production, and I think that we are likely to see a new record high of the production from the US this year rising probably even above the expectations if we see this continuation on the price side. But for the short to medium term, for the next 3, 4, 6 months, I think that there is a very strong momentum behind the prices right now, and prices might reach even the levels of $75 or even $80, but the prices will not rise towards $100 because of the reaction by the oil shale from US.
All right. Eugene, a two-part question, both on the demand side as well as on the supply side. Obviously, we've been seeing how the global economic growth has been slowing down. The tensions between US and China have still not gone away in totality. That could have a wane in terms of the overall demand. On the supply side, you have the OPEC leader, Saudi Arabia, saying they're going to take any measure possible to make sure that there are cuts could possibly even go through to the end of 2019. Well, as Russia on the other hand says that they're not looking at big production cuts. So how would all of these dynamics weave in together in terms of the demand as well as the supply?
Yeah, there is a very volatile situation ahead, right? Because you described very perfectly right now the playing field at the moment. It's a lots of tensions between Saudi Arabia and the rest of the OPEC, between the OPEC and the consumers, between the world economy, which is struggling right now with recession fears rising, and at the same hand also the supportive measures by the world central banks. We are likely to see the cuts in US. We are unlikely to see a rise in interest rates in Europe for the next at least 2 years. So we are in a situation where the central banks will be providing also the powder for the financial markets. In this situation, we are likely to see a very volatile movement on the oil prices, and definitely the rally is not sustainable because it's not demand-driven, it's very much supply-driven, but it may continue for a while. So definitely the demand in a very long picture is the driving force behind the oil prices right now. The movements on this side, the amplitude of the demand increase or decrease expectations are just much lower than on the supply side. So we are talking about 100,000 more barrels per day, or 100,000 barrels per day less on the demand side, while on the supply side of the things we are talking about probably right now the deficit of around 500,000 barrels per day. So definitely very different dimension of numbers.
All right, Eugene, thanks very much. Quick update coming in there. Quick comments on what's been happening with regards to crude oil prices, which have started to stiffen a bit. Brent crude now at $70.67 per barrel. Well, earlier today, Saudi Arabia's Energy Minister Khalid Al-Faleh said that a sense of balance is the key driving factor behind the decision-making on oil prices, not prices themselves. Listen in.
I'm not driven by price objectives. I think we can feel it when the market is healthy. We can feel it when investors are comfortable. We can feel it when people are... you saw last week that in the US, for the first time in almost 2 months, the number of rigs is coming up. Many will consider this bearish. I consider it to be healthy. Okay, that's one of those vital signs, just like you measure your temperature when you have a fever, and if the temperature goes down, if your white blood count goes down, that means you're coming out of the fever. Those number of rigs coming back gives me an indication that the market is, coming up, the rigs, that gives me an indication that the market is coming back to health.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits, by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with countdown right here on Bloomberg Quint Live. 28.5 minutes left for the markets to shut shop, and they've recovered a little bit from the lows of the day. I must say the Sensex is now down only 0.5%. So a bit of a recovery from the lows of the day, but the Nifty Bank certainly under pressure in the session today. Before we get to other pieces of news, let's talk about the mutual fund data. Net equity mutual fund flows showed an uptick in March, posting a positive figure after 4 months. But the overall outflow in balanced funds hurt the picture. Yash Upadhyay caught up with Amphi CEO NS Venkatesh and started off by asking him why he thought equity funds saw such a recovery in March.
A couple of factors. One is essentially the credit events thing had a little bit receded. The second one is essentially the border tensions have also eased. The third one is the macroeconomic indicators, which says that essentially we will be growing at over 7%, coupled with the inflation also being within a moderate range of somewhere around 2.5% to 3%. So I think that has boosted the sentiments in the market. The volatility in the market has eased, and we find that there is a bullish sort of a trend coming up into the equity market, getting reflected by the NSE 50, the Nifty 50 showing better numbers, scaling new heights, and the Sensex also scaling better heights. So I think that has rubbed off into the mutual fund industry, in the sense that the mutual fund investments have also shown particularly predominant preference for people to start investing into the equity mutual funds.
So while the retail investor has remained very mature, and we have seen yet another month of 8,000 crores plus of an SIP book, but that number at about 8,055 crores is somewhat, limited. While it is only about marginally lower than the previous month, do you see any risk of, an upward movement from here on, or do you see that this is some sort of a cap to that number?
We don't see it, because if you look at the way the SIPs have grown, SIPs were at around 7,100 crores as on March 2018, which has come to 8,055 crores as on March 2019. So roughly around 1,000 crores over 1 year it has increased. Right. So we believe that with the various investor awareness campaigns that we are running, the distributors also reaching out to the last mile investor, we believe that the SIP as a process will continue. If you look at the number of accounts that we have opened in SIP, the SIP numbers were 2.11 crore accounts in March 18, which is now at around 2.62 crore in March 19. That means we have added around 51 lakh accounts during this 1 year itself. So I think it is showing a robust growth. So we are quite confident that going ahead, when the volatility is going to be lower and when the market is going to look up, we will find that more and more people will use SIP as a process to start investing into the mutual fund industry.
That's right, sir. But One more thing that stood out for me at least was the fact that the income segment reported a big jump up of almost 13,000 crore rupees in the month of March after a series of months of negative outflows. Is it just a one-off, or do you see a pickup in trend from here on?
I think we are turning. That market is turning in the sense that previously it used to be negative or marginally positive. From there it has now come to around 13,000 crore. So it's turning. People's investment preference is turning. Mainly based on the fact that the monetary policy stance has changed. The monetary policy stance has changed into one, the dovishness in the market with the rate cuts coming in, then clear assurance from the central bank that they are willing to give more liquidity into the market. So I think these two factors have brought in that positive sentiment into the income funds or the debt funds for that matter, plus the worries of the credit events which have happened is slowly receding. So I think these two factors have given a fillip for the income funds to grow.
So one of the biggest contributor to the outflows in terms of total mutual fund industry was the fact that we saw a more than doubling of the outflows in the balanced fund segment, more than 51,000 crores for the month of March. Have investors completely lost faith in the balanced fund segment? What are you gathering?
No. On the 51,000 crore part, it is essentially, I would say, it has come from the liquid funds. But the balance funds, yes, there is a negative outflow in the balance funds of around 4,000 crore for this month. I would say that the balance funds, mainly because of the tax structure getting changed, people are reassessing as to how to look at it. Second one is reallocating from balance funds into the income funds and maybe the other funds where they feel that they are able to get a better return at this stage. I think that reallocation strategy is also going around. But I believe that for an investor who is only for taking moderate risk, balance funds is the best funds to stay invested. So I think some of them will come back into the balance funds at a later stage after reassessing their risk appetite.
All right, back to the markets then, and let's find out what has made it to Yash Upadhyay's list of the Fab 4 stocks for the day. Yash, good afternoon.
Good afternoon, Devina. I'll start first with NIIT, and that one's up in about 17% in today's day of trade, and that is following the announcement that Baring PE would be acquiring a significant stake in its subsidiary NIIT Limited from the company. It's up, in fact, it's locked in an upper circuit of 20%. Future Consumer was at one point higher by more than 2.5%, and that is after the company announced that it would be raising close to 350 crore rupees from existing investors like IFCI and its promoter group in order to fund its expansion plans. Also watch out for some of the smaller banks. The Dhanlakshmi Bank is up 10%, and with this it has gained more than 20% over the last two trading sessions, with volumes too coming in significantly higher. And lastly, some of the gas names, they are doing very well. IGL is up 2.5% with a high open interest build-up of more than 26%, which indicates that the traders are taking fresh long positions as far as the April futures data is concerned. Back to you.
Right, Yash. Thanks very much for that. Sameer, before we let you go, just quickly comment on something that you've probably culled out right now in terms of your research that has that potential to be a multi-bagger.
So I think IGL is one because I believe the recent awarded cities which they've got are very low capex requirements because they are nearing Delhi. So, and the potential is quite high because a lot of highways pass through them. So a lot of vehicle route is there nearby. And secondly, the prices which they have taken up recently, that is more than what their cost has gone up by. So they have an incremental margin coming out. And I think as per the North India size and a lot of traffic which Delhi sees and NCR region sees, I think IGL has a lot of way up to go. And it's been on a sideways for a long time as of now, due to the PNGRB case and everything going on against it. So I think it's due time where IGL nugs off.
Okay, got it. IGL is, yeah, go ahead.
Yeah.
All right. That's IGL, that's Sameer Kalra's pick there from the medium to long term. Sameer, thanks very much for joining us. Appreciate it. Dharmesh Kant of IndiaNivesh Securities is also joining us on the show this afternoon. Dharmesh, good afternoon to you. A few stocks that you're watching out for come today? Obviously, you've got the big newsmakers, but aside from that, individual pockets have seen some amount of stress, like sugar. You've got the banks looking under pressure this afternoon, and obviously IT is going to continue to remain in focus as we step into the earnings season, and come Friday, Infosys reports its numbers.
Yeah, good afternoon. See, I think the market has entered into a bit of a volatility kind of a phase or scenario because there are two things. One is the earnings seasons is getting kicked off primarily by the TCS and Infosys. When they announce the numbers, that would be the major numbers flowing into the market, and from there the steam will pick up. Secondly, even elections will start, the voting will start at different constituencies from 11th of April. So both this put together will create a zone for the market where, I mean, 11,500 you take as a fulcrum for Nifty. 200 points plus minus should be the gyration which we will see. The morning started on a positive note, but we did see selling coming off in most of the baskets which were, you know, up and going steady during the first half of the session. So this is likely to be the scenario. Still, I do believe there are pockets of strength. I mean, consumption theme will play out in this volatile kind of a phase. And stocks like Unilever, ITC, Davos of the world, or even, you know, white goods maker like Voltas, Whirlpool, Symphony. These are the pockets where one should be looking for buying into weakness, so not into strength but into weakness. If you get an opportunity where these counters are down 1 to 2%, and one buys, definitely traders are going to make money, as well as from investment perspective also this looks to be a pretty good bet to me. So consumption is the theme, primarily, you know, FMCG and white goods space where we are focusing on for the next 1 or 1.5 months.
Active names in the session today include a Motilal Oswal, include J Corp and Jet Airways, 3.5% higher. We've spoken about Jet. Let's talk about these 1 or 2 brokerage names which are done. The Vodafone Idea is the other one. Sumeet, Bagadia, to you on Motilal Oswal. After a really long time, we're seeing this stock move so much on a single day. Good volumes too. What do the charts indicate?
Yes, you are absolutely right. After a long time, we have seen such good volumes in the stock, and the stock has given a good price action. We have seen good price action also. Looking at the chart, it seems that the stock is headed higher. Today itself, we have seen a move of around almost 60 to 70 points from lower levels. From the levels of 630, 635, we have seen a stock trading at 690 levels. It seems that the stock is headed higher, and 700 would be the immediate resistance for the stock. Once 700 levels are taken away, then there is a possibility that we might see a fresh up move in the counter, wherein the stock can move till 800 or 850 levels. The closing above 700 will decide the trend for the stock. Those who have taken long positions at lower levels, they can hold on the existing long positions with the trailing stop losses to be placed at around 670, 675 levels on lower side for the upside target of 700. Closing over 700 will take stock prices to 730 and 750 levels.
Biggest move since July last year, so that's a big one on Motilal Oswal. The other one is Vodafone Idea. Brijesh Singh, 6% higher, 2 days on a trot now, recouping some of the losses. What do the charts indicate?
The stock on a hourly chart, or even on the shorter term time frame charts indicates some sort of reversal has been there. And that too with the increase in volume that happened. So the presence of 1730, stock should hold on at least level of 1680 or 1650. And chances are that once the stock crossing giving a closing above 18 rupees 10 paisa, we can see a stock jumping to the level of 1925. So chances are that that stock at least would be, it's heading for a level of 18 rupees 10 paisa followed by 19 rupees 25 paisa. The only thing is that keep a strict stop loss of 16 rupees 80 paisa.
Okay, that's Vodafone Idea for you. 17.3 is where it's currently trading at. Last 1 month, though, it's been down about 46%. Prior to the move today and on Friday, you had the stock dropping like a stone over the last few sessions as well. In the last 7 days, it fell 40%. So you can just see just off the cliff for a Vodafone Idea. But it's time now to take a look at what dealing rooms are recommending this afternoon. Yatin Mota is here with his channel checks. Yatin.
Good afternoon, Devina. A couple of stocks to watch out for. HPCL, that is one stock which has seen some selling. In fact, the stock has moved to the day's low as we speak. However, on the dealings room side, the dealers still believe that there could be some further downside, and hence a sell today, buy tomorrow kind of a recommendation coming in for these oil marketing companies. IGL, on the contrary, is a PSU oil and gas stock which is doing well in trade. Dealers do indicate that domestic funds are said to be buyers here, 2.5% up for that one as well. And finally, PVR. This is one stock wherein dealers do expect some short-term upside, of 8 to 10%. Stock is almost flat. However, the volumes have been picking up for the last few trading sessions, and dealers do expect that from the delivery-based, buying side, this is one of the stocks which is on the HNI's top list.
Right, Yathin, thanks very much for that. That's the chatter within dealing rooms this afternoon and what's been happening thereabouts. All our guests are still here with us. I want to just quickly look at some of the other bigger movers within the mid-cap pocket right now and what's happening. Aside from the fact that you are seeing some pain within the sugar pocket, a few other stocks that are looking weak include the likes of Adani Enterprise, which is down 3.8%. Just Dial has moved lower, 3.2%. VIP Industries, 2.5% given up. BEML2 looks weak this afternoon. Amongst the gainers and the top draw in today's session is obviously NIIT Limited. PC Jewelers also doesn't do all that badly, 91 rupees in the stock. Bajaj Hindustan has a divergent move to what we're seeing on Srinagar, Balrampur Chini and Jet Airways. Not the highest point of the day, but still about 2.77% higher right now. Just a quick word on these stocks, and I'll come to you, Brijesh, for a trading opportunity within the mid-cap IT pocket.
NIT Tech, if I talk about, I've been recommending NIT Tech from a level of 500 from September 2017 onward. I've been tracking this, and we have re-rated the target from 850 to 1000, and then follow up by 1250 and then 1400. So at this juncture of time, for an investment point of view, has been concerned, should be avoided. I'm not looking stock performing or going above say 1350 in a shorter term time frame. Whereas the smaller IT has been concerned, it's, if I'm not mistaken, I think if it's on a upper freeze of 113. So if someone wants to play for a very short term time frame, then there are two important support. One is at 100 rupees psychological mark followed by 107. And whereas on the higher side has been concerned, 120 to 122 would be the first target, followed by 130. So chances are that the stock is heading for the level of, at least for the level of 122. So keeping a stop loss of 107, one can look at to buy this counter and play for the target of 122.
Okay. Well, just before getting closing strategies, the other pack which has just fallen off the cliff, higher crude prices being the principal reason, are oil marketing companies. Dharmesh, Kant, IOC, BP, HP, all of them off today. A large portion of the damage done, or do you reckon that there could be still some more damage out here because oil is refusing to come off? It may not be going up too much, steady move upwards, but definitely not showing any signs of a pullback.
Yeah, that's the reality of all these oil marketing companies, because whenever crude goes up, and this time it's a double whammy kind of a thing, because even the currency is going up, I mean depreciating, so both of them hurts them badly, and there's a tolerance level. So beyond that, even government doesn't allow these companies to pass on the hike in the prices. So but that is the reason why we are seeing the correction. So these are at best, you have to time these oil marketing companies with currency and the crude plays. As of now, I mean currency is headed towards 70, 71 kind of a mark on INR USD. And Brent, I think 75, 76 is where it should go. So some more space for oil marketing companies to go down on the price action. But having said that, let me also point out, this time when they report the earnings for Q4 should be good, because there would be inventory reversals which they have earlier paid for higher crude prices. So earnings will be good, which should provide a floor to these companies. But yeah, 5-7% more correction from here is very much on the cards.
Okay. Since we are just minutes away from shutting the markets or wrapping up the markets, let's just get in top closing strategies. We will also get a view on some of the top losers on the index, but first a top closing strategy. Sumeet, to you first.
IT stocks are looking a bit good to me. We feel that IT stocks can give good up move from present levels. So Tech Mahindra is a good buy at present levels. Tech Mahindra stock can give a move of upside till 805 or 820 levels. It's a buy at CMP with a stop loss to be placed at around 777 on lower side for the upside target of 800 and then 805 levels in next 1 or 2 days time horizon.
Dharmesh, Kant.
Sorry, just Brijesh, your top closing strategy first.
See, I have 2 buy calls. The first is Power Grid. The stock on a very short-term time frame has moved up from 195 or 196. If I'm not mistaken, 199 the stock has been quoting. So one can go for a buy side with a strict stop loss of 196. Play for the target of 202 to 203. Another would be from an FMC packs, that is ITC 292.5. The stock has been quoting with a strict stop loss of 291. One can take a buy call in it and play for the target of 295 or even 296.
Right. Dharmesh, what would the take be? Take some profits off for the table for real estate as a pocket?
Yeah, definitely. So there's nothing being working out well for real estate as far as sales are concerned, or even the prices of be it commercial or residential units are concerned. It's a pan-India phenomena. Why this trade was up? Because of the interest rate cut. It was in consecutive session by the RBI, so 50 basis lower, and the hope is that the transmission will happen this time around. So this one flip trading bet was being played around, and this is a time to book out of most of the real estate counters. The exception being Oberoi Realty, which still is a value buy because they are sitting on a very good inventory and which are likely to be sold. Most of them have been pre-booked. So, but that is one company which would like to keep in the real estate basket. Others are definitely exit.
Okay. That's on the real estate pack as a whole. We've been talking also about the move that we've been seeing in some of these counters like Just Dial, which is down in the session. You've got a Max Financial that's down 4% in trade right now. And both of these stocks have been under pressure. For a Max Financial right now at 424, Sumeet, do you track them at all?
Max Financial?
Yeah.
See, it has given a breakdown. It has broken the support levels. It has broken the 200 DMA levels. Closing below 430 will take stock prices to 410 or even till 400 levels. It's better to avoid long positions in Max Financial. Those who have taken short positions, they can hold on the existing positions. Short positions with the stop loss to be placed above 432 levels on closing basis for the downside target of 410 levels.
Okay. 2 other stocks, Yes Bank and Tata Motors. Tata Motors now at 201, had gone to levels of about 207, 208 just last week. And Yes Bank now at 260. That's down about 2.5% in intraday trade. Dharmesh, I'd like your opinion first with regards to Yes Bank, and then we take some trading calls on whether or not you can have a technical play on either Yes or Tata Motors.
Yeah, Yes Bank does look a very good fundamental buy at current prices. The management has changed, so things are falling into place, and whatever interaction we had with the team out there, it seems that business is as usual in Yes Bank. At the same time, with the RBI clearance coming on their asset quality front, it augurs well for the company. I think it will take a couple of more months for the new CEO and MD to take entire charge of the business flow and exceed the current run rate at which they are working. But they have been doing fairly well. So it's a deep value buy to me, and any price correction, be it 240, 260, should be bought into. We have a price target of around 380 based on FY21 price to book value estimates. And we do see a deep value in Yes Bank going forward from investment perspective. So we are recommending our clients to accumulate this stock on any corrections.
Okay. Dharmesh, we'll leave it at that. Thanks so much for taking the time out and joining us today and giving us your thoughts. Appreciate your time.
Thank you so much. Thank you.
Well, Indiabulls Housing Finance is now trading at the lowest point of the day. For somebody who initiated a short at the start of the trading day, Brijesh, would you cover the shorts or carry home the shorts?
See, right now at 859, I would be carrying on with the strict stop loss of 875 or 885. And as I have said, I am looking at least for the target of 830, 835. If it trades there, then one can take book a partial profit. If it gives closing below that, then it has been heading for 780. If I'm not mistaken, that's the target I have given to you. So the short should be carried on with the strict stop loss of 875. Play for the target of 830, 835, followed by 780.
Yeah, ICICI Lombard as a stock is trading at fresh 52-week highs for itself. So do watch out for that one. The general insurance player trading at 1060 odd. The other one which is trading in the green today is Maruti Suzuki. So 3 or 4 days now of gains for Maruti Suzuki. So do watch out for that one. Sumeet Bagadia, if you were long in Maruti 2 or 3 days ago, looking at the markets though, would you take those longs off or would you stay long?
We have taken long positions in Maruti at lower levels. We have recommended Maruti to our clients also, and we will hold our long positions as we see that the stock is headed higher. A closing above 7200 will take stock prices to 7500 levels very soon. It's quoting at around 7130. It's a buy at the current market price also. And those who have taken long positions at lower levels, they can hold on the existing long positions with the trailing stop losses to be placed at 7020 levels for the upside target of 70 to 70 and then 7500 levels in the next couple of weeks.
Okay. What about Hero MotoCorp as well? While it was trading at its 52-week lows, the pickup has been quite steady on the counter. In today's session, though, it's back down about 1%, but at 2600 odd, would Hero MotoCorp warrant a buy? Pritesh?
No, it would be avoided. I am not looking stock, crossing immediately 2700 mark, because the stock on a daily chart has been still trading with lower tops and lower bottom formation. No doubt the recent swing low of 20 from 25.15, the stock had given a bounce back, but the bounce are with a thin volume. So at the present rate of 25.90 should be avoided on a long side.
Okay, gentlemen, stay on. We'll take in closing thoughts from you, but here's how the markets are shutting shop today. In the red, not at the lowest point of the day, but certainly off from the highs of the day as well. So a bit of a mixed bag, but certainly more weight to the bears. It'll be very interesting to see what the FI numbers look like in the session today. The mid caps and the small caps, and mid caps in particular, were down. They too have actually recovered a little bit of lost ground, so down about 1%, currently about 0.75%. The small cap index though stays about 0.5% lower. So it's a day which certainly belongs to the losers. Let's talk about the large cap and the Nifty 50 names. Devina, I'll bring you up to speed with what's happening at the broader end of the spectrum as a whole. IT's done well, I must say. That's probably the lone ranger. So TechM, Infosys, TCS and HCL Tech down below have all done well. M&M some gains to itself, Power Grid some gains, Wipro some gains to itself. So all 5 IT names in amongst the top 10 or 12 names. So IT certainly had a good day. What's not had a good day? On news is Indiabulls Housing Finance, but beyond that, a lot of others have come off. In the financial space, Bajaj Finance, Yes Bank are all down. And then the commodity space, so IOC, Vedanta, BPCL, Reliance Industries, all of them down. Eicher Motors has lost a little bit of lost ground, some bit of ground, and Adani Port bringing in the list of losers down about 2% as well. So very, very wobbly for the losers list in the session, and rate sensitives and metals, the 2 best performing indices last week, have given way. Devina, what about the broader end of the spectrum?
Well, a few stocks, and probably driven by news, is what's keeping them active in today's session from the broader market standpoint. One being NIIT Limited. The stock is up 20%, I think, at the last count that we saw. The indices have not done a whole lot much, so closer to 1% is what they've given up. But that's NIIT Tech. I'm talking about NIIT Limited, which is actually done well in the session, closer to about 19% from the last time we took a check. I think it's thereabouts, about 20% for an NIIT Limited. Motilal Oswal, Religare, both brokerages doing well. Motilal, for one, has seen a really big move in a long time now, and the volumes have supported this pricing move that we're seeing. So the stock has moved up. Religare is up about 5%. From the real estate pack, it's Indiabulls Realty, which is doing well, aside from the fact that you are seeing some profit taking in other real estate counters like DLF as well as Godrej Properties. Lakshmi Vilas Bank is the other counterparty to and Indiabulls Housing Finance. So while Indiabulls Housing Finance is not doing a whole lot much, Lakshmi Vilas Bank locked up on upper circuit since morning. Vodafone Idea, after the losing spate that we've seen over the last 10 days, the stock finally over the last 2 days has seen some bit of recovery. Today is up about 6% PC Jewelers and Orient Cement, a very volatile price move for this counter in the last 1 week. So you had days where the stocks moved up about 6 to 7% and then fallen in an equal amount. In today's session as well, the recovery has been pretty sharp over the last dying minutes of trade. It's up about 5.5%. Losers then, sugar as a pocket has looked weak today. So you've got Rampur Chini, Sri Renuka Sugars down under in the red. DLF and Goldish Properties, like I already highlighted. DLF, there's a big block deal in the morning. HPCL, you probably mention it alongside BBCL and IOC as well. Adani Enterprises, Tata Motors, DVR in tow with what Tata Motors as the stock has been doing. That stock's down as well, about 2.5%. And again, from the sugar allied space, Praj Industries, which is down about 3% in the session. So that's what you've got for your close this afternoon. The indices have given up closer to 0.5%. Broader market looked a little bit more weak.
Yeah, it did. And bring up maybe the market breadth, since Devina spoke about what the broader markets have looked like, and let's see how it's shaped up. Maybe a tad bit better than when we started the show, but still.
It was exactly 1:2, I think, when we started in favor of the bears.
Yeah, so currently
narrowed
about
down
2
a
to 3.
bit.
But still adverse.
Yeah.
The volume should be interesting, Devina, today, particularly on the FI side too later on when we get the numbers. But the FI market volumes higher than what an average day would be.
5.5, but I think as we start to progress, the first week volumes are generally slightly more tepid, but then you start progressing into the month, you'll start seeing these volumes pick up. So for the cash market, that's a pretty good number of about 31,000 crores.
Yeah, interested in the VIX, Devina. It stayed stubbornly high, and now closing in northwards of 20. This must be maybe 3-4 month highs, but a sharp uptick today.
It's an interesting point because sometime during mid-afternoon, the Nifty was absolutely flat. It had not done anything. Even from the start of the trading session, the move today has not justified the movement on the VIX, but the VIX has nonetheless moved up about 10%. So while the index, this is the India VIX, it started off on a high note and stayed that way, even though the index itself did not do a whole lot much.
I'm guessing buying protection is extremely expensive these days. Yeah. But, well, having said that, bring up the contributors, and Reliance must be top of the pile when it comes to the losers, and IT must be on the other side. Yeah, that's indeed the case. Financials all through and through, and some bit of losses to Reliance Industries.
Yep, and that's Kotak Mahindra Bank, 2 points in TCS. Wait and watch as to how they look ahead of numbers. But that's what you've got in terms of today's close. Let's get in some closing comments from both our technical experts. Brijesh, we'll start off with you as we step into trade tomorrow.
Devina, no doubt we have seen a Nifty bouncing from a level of 11,550 to 11,600, and it has closed at a psychological level of 11,600. But the bouncing in the last an hour was not that much with a thick volume. It was a little bit of thin volume. So no doubt we can see an opening tomorrow in a positive note, and Nifty might try to jump to the level of 11,640 somewhere around. But still, overall the trend of the chart has been negative, which indicates there are probability that once Nifty might try and break 11,550, or an initial target is of 11,500. So chances are that I'm still, from a technical point of view, I'm looking that Nifty would try once touch 11,500 mark, and from there we can see a sharp sort of recovery going and surpassing the all-time top. Regarding with the bank Nifty has been concerned, still 29,700 to 29,750 band acted as a support, but on the higher side 30,100 and followed by 30,300 are the resistance. So if this range has been there and if consolidation happened, then chances are that bank Nifty might outperform the Nifty level.
Okay. What about you, Sumeet?
We had given a buy view at lower levels, and from lower levels, Nifty has almost recovered by 50-55 points. We feel that Nifty should give a good move from present levels, and on the higher side, 11,650, 11,700 should be the immediate targets, and above that we see Nifty making new lifetime high in next couple of days. We feel that 550 is a good support for Nifty. So till the time 11,550 is not taken away, it's better to be on buy side, and on high side 11,650, 11,700 can be targets for Nifty.
Okay, we leave it at that, gentlemen. Thank you so very much for joining us this afternoon, Brokerages as well as Sumeet.
Thank you very much.
All right, and with that, it's a wrap on this edition of Countdown. From Neeraj, myself, and the entire team that's put the show together. Thanks a lot for watching.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed.